What's good? What's good? What's good?
It's good,
We
man.
are back, the Good Brothers of OTC. Man, had to take a quick little break, I guess you could say. Some things got in the way. Life was lifing.
Yeah, had a
But
busy last 2 weeks.
boy, but we back at it. And it's gonna be a good episode. Not a whole lot going on that's worth talking about, honestly, in the market. We had Circle IPO since the last time. That was pretty cool. It went from like 30 something dollars and it's currently sitting at 105. But we gonna have a teaching pod
Yeah.
since there's not a whole lot going on in the market. We gonna have a teaching pod. We gonna talk about DeFi, a particular aspect of DeFi. I'm gonna really get into that today. How I go about scoping out opportunities, how I go about entering those plays, and how I go about managing those plays. And then of course we have some other stuff going on, stock related. So we definitely not going to leave you hanging in that aspect. Um, so yeah, let's go ahead and get started. Let's go ahead and get started. So one of the main aspects of DeFi is providing liquidity. And a lot of people, they look at me funny when I talk about providing liquidity. It's a very foreign concept. But the way I like to explain it is imagine you are a bank facilitating something akin to foreign exchange, where you may hold a certain amount of US dollars and a certain amount of Japanese yen and a certain amount of whatever. And you facilitate exchanges between those currencies and you charge a fee for that service, right? So you're providing a service. That is the same thing as providing liquidity in a LP, which stands for liquidity pool. In the world of crypto, everything is about decentralization or peer to peer, whatever, right? So when it comes to providing liquidity, you are essentially providing a service that allows for peer to peer trading between supported assets. And in doing so, you, as the person providing the liquidity, are able to earn a fee on that facilitation of the trade. So when you have some quality assets, it can be a good way to put your assets to work instead of just hoping and praying when price appreciation occurs. Because if you've been in crypto for a while, you know most of the time you are either stagnant or you're in a bear market. But when that bull run hit and you're in the right place, that bull run hit. So in the meantime, in between time, that's what DeFi is for. Make money on your assets, whether they're appreciating or not, and offset some of the volatility that you can occur while in the crypto world. So that's really just a synopsis, just an overview of what providing liquidity is. Um, Wanted to give that explainer before I start really getting into the details and sharing the screen. So let me go ahead and bring up my screen. Show my entire screen. There we go. All right. So, first things first, you have to know where to go, or you even have to know about certain opportunities before you just hop out there, right? It's never a good thing to just dive into something without really knowing where to go, who's offering the best rates, things of that nature. So, there are certain websites that can provide you with that insight. Because I'm heavy into the Flare network, I use Flare metrics to kind of help me do some of that upfront analysis on um, opportunities that I may want to take advantage of. So this is called Flare metrics, and obviously these are pools that you can enter and put your assets to work across the network on DEXs or decentralized exchange. That's what a DEX stands for. So when looking at these opportunities, there's a couple of things that you always want to pay attention to. For instance, you want to look at the assets that are in that pool. Not all the time is it just all about how much of a yield you can earn, because obviously 121% APR, pretty intriguing. Pretty intriguing. You can't get 121% APR by just holding cash in the bank. That is for sure. But that's not always the thing that you want to just look at and be like, oh, yeah, that's the perfect opportunity. You want to look at the assets within that pool. So in this particular pool, you have Flare USDC. You have a stable coin, which is what USDC is, and you have Wrap Flare, which is a volatile crypto altcoin. It is the main token of the Flare ecosystem, but regardless, you will experience some level of volatility in Wrap Flare, but not in USDC, because USDC is backed 1-to-1 to the US dollar. It's supposed to act like a digital dollar, just to make it simple. So to me, this is a good pool, right? Because I have a stable coin paired with a volatile asset, and APR is pretty good. Kind of gives you a breakdown. Based off of fees alone, you will be earning 31%. But this pool is incentivized, heavily incentivized. You get additional rewards by being in this pool, and that makes up 90% of that APR, total APR. So you got 90% on incentives, and you got 31% in just fees alone that you can earn while having assets in this liquidity pool. I'm gonna pause there. You got any questions? Because I know that's a lot.
Nah, I mean, I've kind of already been exposed to this a little bit, so it's a little bit easier for me to follow. You know, as far as somebody who's like completely new to it, they may be
Right,
a little lost.
right.
It's a little learning curve with this. I mean, just like
It's always is. But that is a good point. So just diving in deeper, or just recapping what I talked about. We got two assets here that makes up a pair. You got USDC, which is a stable coin, and you got Rat Flare, which is a crypto asset. This pool in particular is offering 121%, and it's on the Enosis DEX. So what is the next step that I do? Well, I like to look at 24-hour volume and look at the TVL. And this website may not always give that. So I like to actually go look at the DEX itself. And I'll go do that here real quick, kind of show y'all if I can spell right. There we go. Let's go to liquidity. All right. So that was USDC Wrap Flare. It's down here. It's actually 135%, a little higher than what was projected on that website. But 24-hour volume, 139K, 7-day volume, 108K, 30-day volume, 4.6, or I'm sorry, 108, 1.8 million, 1.08 million. 30-day is 4.67 million. So a lot of bread is moving through this. 24-hour fees. The only issue is that even though a lot of bread is moving through this, it has only made $419 in the last 24 hours. So whoever is providing liquidity in this particular pool, they've basically taken a split of $419. Now, on bigger networks, obviously, you would see a lot more money moving through the network. So say you are on ETH, or you want to put your ETH to work. You would probably use something like Aerodrome, right? Where similar things can happen. So wrapped ETH USDC, $1.19 billion in the last 24 hours has moved through this pool. They've generated $483,573 in fees in the last 24 hours. That is way exponentially more than a smaller network like Flare. So got to keep that in mind. All depends on what asset, what network you're on. If you are more into like trying to get in early on certain networks to catch some of that growth potential, then you would go with something like Flare. If you want to go with something a little bit more established, maybe a little bit less risk, then you would go with something like ETH and put your work or your assets to work on something like Aerodrome, where they have billions of volume a day, depending on the pool. Just wanted to throw that out there. So as I'm looking at stuff like this, those are some of the metrics that I am looking at to determine whether or not I think it's a good pool. Now, say for instance, you come across an asset like, or you come across a pool like, I mean, what's a good example here? Something that's not stable. We'll do, and they used to have different ones on here. We'll go here. Just use this as an example. Okay, so two assets that are both volatile, but they have a high APR does not always mean that's the best um, opportunity. Trying to find one. There's not really any. Let's do aerodrome. So the reason why I say that is because if you don't know anything about that asset, it can be a scam or it could be extremely volatile, which means the risk of losing your capital is higher. So for instance, we'll just use this pool here on Aerodrome, 611% APR. To most people, if that's what you're looking at, if that's the thing that catches your eye, you're going to think that's immediately an absolutely amazing pool, an opportunity. Why isn't everybody in that, right? And that is pretty attractive. But you want to pay attention to the quality of the asset that is in that pool. So ETH, yes, that's a high quality asset. Aave, in this case, yes, it is a high quality asset. But say you were looking at two assets that you don't really know about. They're both volatile, so they're not, stable coins or anything like that. While one asset is decreasing in value, you're increasing the value or you're increasing the amount you have in that pool on the other side of that pair. So while Aave is decreasing in value, you're gaining more ETH. Or opposite may happen. While ETH is decreasing in value, your Aave, your concentration in Aave is increasing, right? So, what you want to make sure of is that you don't care whether or not you are holding either of these assets long term or anything like that. Like if you get converted entirely to into Aave, right? You would be okay with that. If you gotten converted entirely into wrapped ETH, you would be okay with that. So that's a question that you'll have to ask yourself well before you get into any pool, especially extremely volatile pools where the asset there where there's no stable coin involved in the pool. Because if that does happen and you're like, well, damn, I lost out on my ETH holdings or I lost out on my Aave holdings. You don't want to feel that. You want to be like, oh, okay, I got more ETH in the long run, or okay, I got more Aave in the long run because that's something that you assessed before you got into that pool. So you fully understand the risks, you fully understand what could happen, and you would be okay with that regardless. Because at the same time, you're also earning 611% APR. So if you're okay with that, then yes, this would be a good opportunity and you would enter in that. One tool that I use though, especially for pools that both have volatile assets in them, so no stable coin, I use DeFi Llama quite a bit. DeFi Llama, whether it's Flare, ETH, Bitcoin, XRP, whatever, if it has DeFi and you're able to leverage or put those assets to work, then this tool will be pretty helpful for you because you can literally add whatever tool and see what's called the correlation. The reason why correlation between assets is an important metric to look at is because that can help you gauge how volatile that pool may be, right? So again, remember, if you put two assets in a pool and one asset is increasing in value while the other asset is decreasing in value, you'll hold more of the asset that's decreasing in value, right? Vice versa. So this type of tool is really good to help you gauge how volatile an asset is. And correlation basically just gauges when say for instance, when BTC is moving up, most of the time ETH is moving up, right? So when you look at here, so BTC and ETH, they have a correlation of 0.09. That's in the green, but that's super, super loose compared to what it normally is, probably because BTC just went on a run back to over 100,000 or almost 110,000. ETH tried to pop a little bit, but not so much. So yeah, BTC, ETH are correlated by 0.09%. Anything that's the closer you are to one, the better, in my opinion. But as long as it's green, it's pretty good. Now, something that's red, looking at XRP, where's it at? USDT zero, XRP. So even though this is a stable coin, USDT zero, XRP, when paired with XRP, it has a correlation of negative 0.19. Now, why is that, even though it's a stable coin? Well, that's because there are no liquidity pools available for people to provide liquidity denominated in XRP USDT zero just yet. So their correlation is basically non existent. Now, when there are pools available for those two assets, then I'm pretty sure that this correlation will start itching closer to one. Let's use another example. Flare XRP currently has a 0.41% correlation, right? Or 0.41 correlation. So that means it's pretty correlated right now. When XRP is moving up in price, Flare is moving up in price. When XRP is moving down in price, Flare is moving down in price. And that's really how you read this. This is a really important tool to make sure you are analyzing certain opportunities. When you scope out an opportunity, you see that the APR is right. You're interested in both assets, but maybe you don't know how they move together. Then you go to DeFi Llama, you use their correlation tool, you kind of scope that out. That should further confirm whether or not you should enter that pool because it's a good opportunity. If you see a pair that's not correlated, right, and you still enter it, you should be entering that pool knowing, hey, these assets are not correlated that well. So that means if any of these assets start moving lower in price, right, one could be increasing in price. So then I'm earning more of the less valued asset. Am I okay with that? And vice versa. When a pair is tightly correlated, that means you're moving down and up relatively around the same time. So your levels should even out and you're not entirely being converted in one asset or another, which allows you to continue to earn fees on that position and you don't lose value on that position as harshly, when price moves down. So I think that is about it. I mean, that's really how I go about providing liquidity, how I scope out certain opportunities. Once you kind of get used to this process, you know where to go. You get used to providing liquidity. You get used to claiming those fees that you are able to charge for providing liquidity. Um, it can be a lot. Even though on Flare it may have a lot less volume than a DEX like or a ecosystem like ETH. There's a lot of money to be made. So you find where your assets are treated the best, where you can earn the most, things of that nature. I know several people with positions on Ethereum that make tens of thousands of dollars a month by doing so. I ain't gonna cap on Flare. You're probably not doing that right now, but that's totally fine. There's a lot of growth in that ecosystem, but in an ecosystem like Ethereum that's already established, where that asset can be used pretty much anywhere, yeah, you can make some bread if you have the right asset. Same with Bitcoin, and soon to be the same for XRP. So again, it's all about what assets you hold. It's all about knowing where to find the opportunities. It's knowing about how to evaluate the opportunities. And then the final step is executing and reaping the rewards. That's really providing liquidity in a nutshell.
Yeah, that correlation piece is important.
Extremely,
Yeah,
extremely. It's one of my favorite tools, honestly. I got some other ones, but I can't just share all the sauce.
the
Can't
game
share
is
all
the
the sauce.
game is to be sold and not told, man. I know.
You already know. You already know.
Yeah, man.
But yeah, but yeah. Let me go ahead and stop sharing that.
All right. So Today, what we're going to be talking about is pretty much we're going to be talking about how I think you should go about, not really how you should go about balancing your portfolio, but some things to think about when you are building out a portfolio. Because I see a lot of people, as of late, especially if you're a new investor, a lot of people usually tend to be tech heavy. It's the hottest thing. We're talking about Apple and Nvidia and Google and Meta and all of that kind of stuff. So a lot of people tend to be extremely tech heavy, which I mean that can get it done. But I want to show you guys and pull the curtains back a little bit, get up under the hood, and kind of show you guys how you can really make your portfolio very solid, recession proof. And have things in there that are not as volatile, things that are going to continue to give you steady growth and going to keep your portfolio balanced. But before we do that, I want to show you guys, because a lot of people would still think in 2025 that you need a ton of money in order to make big gains in the stock market. And I'm going to show you an example of why that is not true. So, the top 3 US stocks by performance up to midday to 2025. Number one is Coinbase. For those of you that don't know, Coinbase, cryptocurrency exchange. If you're in crypto, everybody should know about Coinbase at this point. So Coinbase over the last year, 1 year return, 356.3%. Stock market, that is phenomenal. That's amazing. For 1 year, that's nuts. The next one is Carvana. Pretty sure everybody's heard of Carvana. It's another one. When people are talking about these big stocks, you don't really hear a lot of these a stock like Carvana mentioned. It's not probably one of the most sexiest companies, but they just did 345.7%. And then you have Vertiv Holdings, which over the last year did 343.4%. And they are a big player when it comes to manufacturers of critical data center infrastructure. So they're being pushed by AI demand, cloud computing, all that kind of stuff. So we talked about Coinbase, Carvana, Vertiv Holdings. How much money would you have if you would have invested $1,000 in each one? So we're talking about a $3,000 investment a year ago into those three companies. Coinbase today, you would have 4,563. Carvana today, you would have 4,457. And Invertive, you would have 4,434, bringing you to $13,454 in 1 year's time off of a $3,000 investment. Now, I don't know about you. That's a total gain of $10,454, a 348% return in 1 year. I'll wait while you tell me somewhere else where you can go get 348% in 1 year.
Nah, that's unheard of in the stock market.
And the reason I thought I wanted to tell you guys about this is because, for one, it reminds you to, really do your research on, not just the most sexiest companies, but companies that are solving a real problem, companies that, have a moat, you know, this is their lane and they're dominating in that lane. When you think about crypto and exchanges, Coinbase is probably, I'd say, probably the most well known to the masses.
In the US, absolutely.
When you're thinking about, a company that has really been, what's the word I can use? A company that has, tried to push different avenues in regards to online car sales, not traditional at your dealership type of thing. Somebody who's tried to streamline the car buying and selling process, which is a Carvana. And then you look at Vertiv Holdings, of course, cloud computing, AI, data centers, that's all booming right now. So, of course, a company that's going to be manufacturing that infrastructure is going to reap the benefits. So these are things that I want you guys to be thinking about when you're building out a portfolio. Look for companies that have a moat, that are solving a problem, companies that, may not be the sexiest company. You look at a company like a Tesla, and everybody loves Tesla. Everybody loves, or dislikes their CEO Elon Musk. But when you have a company that may be fueled off of hype, sometimes and not necessarily the meat and potatoes of their business model. Tesla been doing terrible this year.
Yeah.
Whereas you would think a Tesla is probably much more sexy or well known than a Carvana. Yet the proof is in the pudding. So next, to piggyback off of that, I just want to go into how you should be balancing out your portfolio and really breaking things down by sector. So there are, of course, all the sectors in the stock market. You have technology, you have financials, you have communication services, industrials, utilities, and that's really, I want you, when you're looking for companies, break down those sectors: technology, financials, communications, industrials, utilities, healthcare. You can get into cybersecurity, materials, and think about those sectors, and then start looking for the top companies that are dominating that sector. You can pick a top one, a top two, a top three. And once you've done that research and you find the companies with strong balance sheets, companies that deliver a great product, companies that have a very sticky ecosystem, you know, talking about cybersecurity, a company like a CrowdStrike, a company like a Palantir, find a company like an NVIDIA if we're talking about technology, or Google if we're talking about communication services, or financials, JP Morgan. Find those companies that are very, very well established, strong balance sheets, companies that have performed great over a long period of time. And those are the companies that I want you to start to build your portfolio out with. Now, there's only caveat to that. I don't want you, especially if you're a newer investor, to be buying a bunch of individual stocks. I don't think that's the smartest way to go about it. So, like we said before, when you're talking about newer investors, I would advise, you can pick a couple of individual stocks. Of course, everybody loves, and an Nvidia when we're talking about technology, and then a Google, your Apples, your JP Morgans, your CrowdStrikes, different companies like that, and even companies that people don't talk a lot about, like your Visas and your Walmarts. Walmart's a company I talked about a couple of weeks ago. It's a company I think is what I would call recession proof. Walmart's going to give you that constant, steady growth over the long term. Walmart is something that, regardless of the economic conditions, the political conditions, everybody has to eat. Everybody's going to buy groceries. It's one of those companies that it's going to give you the steady growth, and it's not going to give you that crazy downside or be extremely volatile or susceptible to a president like we have now, where things,
Mm.
kind of go up and down all the time. So those are the kind of the companies you want to be looking for. And another reason why I suggest ETFs, because it's going to take a little bit of that volatility away from you as opposed to individual stocks. So when we're talking about ETFs that I want you guys to look into when we're breaking it down by sector. So technology, you have your XLK, and this is going to give you broad exposure to mega cap tech companies like your Apples, Microsoft, Nvidias, low expense ratio. You also have SMH, which is focused on chip makers, powering AI, cloud services, a little bit higher expense ratio, but not too crazy. Then when you go on the financials, you have XLF. This is going to give you that exposure to major banks, JP Morgan, those type of banks. And then when you're talking about industrials, XLI, this is going to give you exposure to industrial leaders, Caterpillar, Boeing, GE, some of those big companies that are pushing that needle when it comes to industrials. And then healthcare, we have VHT. This is going to include your pharmaceuticals, biotechs, and providers. Um, Another big healthcare company, if you want to go single stock, what is that? Eli Lilly, which
Mm.
is a very big one. Johnson and Johnson is another one that's performed well, although you may not want to invest in them if you're one of those moral investors. Uh, But let's say that for another day, man. They've been accused of some treacherous things as of late. Then we're talking about energy and materials. You have your Vanguard Energy ETF, VDE, which tracks U.S. energy companies, including oil and gas. And then you have VAW, which covers mining, chemicals, forestry, and this also outperforms its peers year to year. So, um, just to recap, technology. When you're looking for these ETFs by sector, you want to look up technology, which we talked about XLK and SMH, financials, talking about XLF, industrials, XLI, VIS, healthcare, VHT, energy, VDE, materials, VAW. Hope y'all taking those for one back. Go do your research. Look into these ETFs. Look into the performance. You don't want to be looking at the holdings of these ETFs. You want to be, and another thing, if you do want to, this is why you should always do your research because if you're diving into these ETFs, you're naturally going to find the individual stocks that are pushing the needles within these sectors. So if you're digging into the financials ETF or the healthcare ETF or the energy ETF, you're naturally going to come across the companies within those sectors that are providing the best numbers, and if you want to get into those stocks individually, you can do that. But it all starts with research. Research the ETFs, research the individual stocks if you want to, and just start breaking it down like that. And then another thing I want to touch on is if you're going to be buying individual stocks, please make sure you rebalance your portfolio.
Mm,
Stay involved in what's going on with those companies. Look at their earnings reports, follow the news, pay attention to um, political news, pay attention to any economical events that could affect that company because the knowing when to buy a stock and entry and all of that is good, but if you don't know when it's time to get out of a stock or when it's time to sell, none of that matters. So make sure you're rebalancing your portfolios, paying attention to what's going on, because I'll even say, like for me, in one of my portfolios, AMD, AMD, as you know, was going down and down and down and down. I'm like, okay, I have AMD in two different portfolios. So I was like, okay, I'm gonna keep AMD in this one. It's time to do a little rebalance. I'm gonna take, I had a couple of $1,000s in AMD in another portfolio. I took that out, put that thing in HIMS when it was at $25. That thing ran up crazy 2, 3 weeks later, over more than double my money. So paying attention to the signs, knowing when to rebalance, knowing when, okay, it's time to cut the loss, or it's time to take these profits and maybe put it into something else that has more opportunity for growth in the short term. Just being that if you're gonna go about the individual stock way, you have to rebalance your own portfolio. ETFs, that's why you pay the expense ratio. Those things will be rebalanced for you. Um,
hmm
Depending on how those stocks within that holdings perform. But that's just what I want to put on y'all heads, man. Pay attention to the macro trends, diversify. Um, if you're going to go to an individual route, pick the top 2, 3 performing stocks within those sectors. Really do your research. Another thing, on top of your solidified companies, on top of your ETFs, all of that stuff, I would say you can allocate maybe like 5% of your portfolio to a speculative stock that you may like. Like for me personally, my speculative stock that I've been putting money into is an IonQ. Something there in quantum. Of course, quantum isn't necessarily, it doesn't have the wheels turning like AI does right now, or chip making and all that kind of stuff, data centers, but it's something that is on the horizon. IonQ is a company that has been, forming partnerships, and they're one of the first, and they're developing a lot of things. And I like some of the things I've been hearing and some of the things that I've been seeing from this company. But a company like that indeed is a speculative stock currently. And I see a lot of people try to chase trends, try to do the get rich quick, buy things based off of hype. Don't over leverage yourself on speculative stocks. I don't care if it's the trending thing. I don't care if it's, you know, lit on X or if everybody's talking about it. If it's speculative, if they don't have the performance, they don't have the data, they don't have the numbers, they're not doing what would, you know, justify, some of these prices that y'all buying these assets at, or justifying the hype that they have behind them. It's all what they could be, but maybe that's not something you want to just be dumping a ton of money into. So it's okay to invest in speculative stocks, do it responsibly, a very small percentage of your portfolio, and just invest responsibly, man. But that's all I want to cover when it comes to, really breaking down the portfolio by sector, looking into the different ETFs, looking into the different individual stocks within those sectors. And, just like the example we talked about in the beginning, it doesn't take much money.
Right.
You pick the right companies, you put the money in, you give them time to grow. Coinbase, Carvana, Vertiv Holdings, like we said, $3,000 investment, 4,454 in a year's time. That's amazing. Now, just imagine if these are, investments that you would have put $5,000 in a piece, $10,000 in a piece. The point is, you make those kind of returns, you compound it. Now you're buying more shares of things, more shares. The money only compounds. But yeah, man, that's all I got as far as that. The other thing I wanted to talk to y'all about is we called Trump and Elon's
Yeah.
last year. We said that bromance was not gonna last long. We said it was gonna go up in flames. You dealing
Yeah.
with two personalities, two guys that are, alpha males, very stubborn, very set in their ways, very boisterous, and that 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 relationship finally imploded, man. Live for everybody to
Bro,
see.
it's either that or they both playing a game.
You think it's cat?
It might be.
Mm.
It might be Cap.
But what's taking it too far? Like if we planned a verbal spat on social media, you said I'm in some Epstein files. Like that's kind of crazy for it to be
Hey,
fake.
but immediately after you started seeing Democrats talk about release the files. Before then, they was like, nah, 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 why nah, we don't want to do that. No, no. The minute Elon was like, well, the reason why they ain't been out is because Trump is in, and now the Dems is like, bro, release them. Release them. We might finally got him. We might finally got him. Lo and behold, all the Dems boys, everybody's boys is in there. So it could be, I don't know, dog. I don't know. I don't know. It could be a thing about catching headlines. It could be a thing about they could really be beefing. They could really not be beefing. I don't know, bro. I don't know how to call any of this. I just let it happen now.
Yeah, but as far as that situation, I don't really care about the politics of it.
I don't either.
Of course, we capitalized off of it from a day trading perspective. Shout out to all the day traders. If you was in puts that day, you ate. Um,
Options and futures.
yes,
Because
sir.
I mean, it's the same thing if you know what you're doing. It's the
Yep.
same thing.
And we still waiting on that US and China deal to go through because the cars gonna go crazy. But in regards to Tesla, I know Tesla, it seems all doom and gloom now. They're getting a lot of bad press. A lot of we've heard news of them wanting to replace Elon, and then Elon left Doge, and then he said he's going to put more time into Tesla and his other companies. And then we had the whole situation with Trump, and Trump's going to, take away the incentives when it comes to EVs, which will naturally hurt Tesla's car sales, a company that's already been, struggling when it comes to their car sales, especially over there in China, losing a lot of market share over there. But this is what I want y'all to pay attention to when we're talking about Tesla, because you always have to take your emotions out of it, regardless of how you feel about Trump, how you feel about Elon. Don't get swept up in a lot of the headlines, because Tesla is one of those companies that, yes, they're down now. Yes, there's a lot of negative catalysts, but we cannot forget about all of the positive catalysts and growth catalysts that they have leading into the next 3 to 5 years from 2025 to 2030. Now, They have their full self driving FSD. Of course, they would know about. They got their robo taxi services starting to launch now. I just seen a video today, I think it was, of the new Model Y self driving. We have robo taxi coming out. Of course, they have um, their software services and businesses. They also have the what is that? They have the Optimus
Mhm.
robotics. We haven't even really gotten the robo taxi yet. We haven't even really got into Optimus robotics yet, which according to Elon Musk, he's expecting to pretty much in terms of what it generates to be worth more than Tesla's car sales in the near future, which I don't put it past it, man. Everything is going towards, kind of this autonomous landscape when we're thinking about robotics, especially the robo taxi services, which I think is gonna be dope. Especially if you travel to some of these other bigger cities, they've been having a lot of self-driving vehicles already doing this thing. So I would think that Elon Musk and his robo taxi services will be able to generate a lot of money and take that over. And then of course you have your energy storage and solar expansion. They have their mega packs, solar roof, all of that kind of stuff that's generating a lot of money. And you know, Tesla's just one of those companies I don't think is going anywhere. I can't think of anybody else when we're talking about robotics who can you think of anybody when it comes to building a robot that would be in a better position when it comes? I'm not talking about the technology behind it because, of course, we know that'll be NVIDIA and possibly somebody else when it comes to inferencing and all that kind of stuff. But can you think of another company that would be able to mass produce a robot for the masses or for corporations when we're talking about manufacturing and all that kind of stuff better than Tesla?
None, not really. I mean, when I think of robotics, I immediately think of like Boston Dynamics, but they're not mass producing their robots. That's more like research development, probably more military type use cases. Um, so as in terms of retail, nah, I just see Tesla right now. I mean, I
When
would throw out Amazon, but I think that would catch a lot of people off guard. But
I
at the same time, it's they really don't have the infrastructure for it. So I don't know.
and when you think about autonomous vehicles, whether we're talking about vehicles being able to drive from point A to point B by themselves or fully autonomous vehicles in regards to changing the way or the landscape in which people use things like Uber and Lyft and taxis and all of that kind of stuff. Do you see anybody that could overtake or pull away from their market share when it comes to the autonomous driving, autonomous vehicles in the
Nah,
in the United States?
you're right. That's important.
Yeah,
That's important
yeah,
because China
yeah.
on a different level on some of that. But in the US, no. I
So,
think literally Tesla is like number one in both those
so
categories.
this is what I want you to think about. If you have top companies like an Nvidia, other major car manufacturers, putting billions of dollars into autonomous vehicles, robotics, inferencing. When it comes to training these robotics, you have companies that are going to be willing to spend money in regards to both aspects: autonomous vehicles, Uber, um, Lyft. You never know how many other companies could what people could get into. You could
Mhm.
have normal entrepreneurs wanting to buy a fleet of these things. The money generating possibilities for autonomous vehicles once they get it to where it needs to be is damn near limitless.
Bro,
And
I didn't even think about the entrepreneur aspect. I didn't even think about that. Like a regular common person buying like two
the
or three of those.
taxi is 30 bands.
Oh yeah.
Why wouldn't you
But
want
okay,
to?
imagine like medical lifts. You know how people got to get transported to and from they doctor's appointments or whatever the case may be. A lot, or like special needs people who are still able to go to work, but they need to be transported. Bro, like you could have a fleet of those once Tesla makes them, and it's automated. You have a medical lift, all that type of stuff. Like I don't know. I mean, obviously that's touching other areas, but their possibilities if this works is endless. And I didn't even think about it from an entrepreneur perspective. That's actually,
And I
yeah,
think
that's powerful.
I think people forget it's not just Robo Taxi. If you watch that event, they also showed like a big ass party bus.
Yeah, that's what I'm saying. Or
So,
like that
yeah.
semi.
So when you're talking about autonomous vehicles, we already know that when it comes to the real world training model, there's nobody beating Tesla. They have been pulling real world, real driving data from their Teslas for years now.
Yeah,
They're
yeah.
going to be number one in the autonomous vehicle space.
I would be shocked if they didn't have the most comprehensive and robust driving specific AI model.
Yeah, they have everything they need. If you have a Tesla right now, there's literally you have to go toggle it off. There's literally a setting in your car right now where Tesla is pulling data from me driving, and that's it's part of their ecosystem.
Right.
They can use the live feed from you driving in different situations, different scenarios, and use that to train their models. It's what they done, the real world training. So those are two things when we're talking about autonomous vehicles, when we're talking about robotics. I don't see anybody beating them. So you can say, oh, yeah, right now it's doom and gloom, the price is going down. But when you have companies, when you have all of these people pouring millions and billions of dollars into these innovations, this is where the world is heading. Autonomous vehicles, robotics. There's nowhere around it. This is where the money is going. This is where the world is heading. We've seen it on too many conferences. We've seen too many companies like an Nvidia talking about it, putting money towards it. It's happening. It's being developed. It's on the way. And when you're talking about a company like Tesla, they're going to be a big part of that. So I say all this to say, don't get swept up in the BS. Another
Mhm.
example, what was it like 2 weeks ago when we found out that United Healthcare was being investigated?
Yeah. Yeah.
Price dropped. People said, look, I don't care. Smart investors said, look, I don't care about that. Dumb money is going to be selling. Smart money knows that, okay, they can get investigated. When it comes to healthcare, they're still the number one.
Yeah.
Price is going to come back up. People bought at those crazy lows where people were selling off of news and hype and getting carried away, just like we did with Nvidia and all these other stocks. And we had the stuff over there in China. People do this all the time, and smart money capitalized and made money.
Yeah. I mean, especially if you're looking at market. Like I know most people don't care about this, but investors they looking at market cycles too. So a lot of the times around that doom and gloom news, it's just performing a natural retracement. It was gonna retrace anyway. So yeah, I like with the Tesla situation. It was probably time for Tesla stock to cool off. I haven't looked at the chart in detail like that, but it was probably time for it to cool off. So I mean, that was probably the ultimate buy the dip opportunity when it came to Tesla. Like you may not see those prices for Tesla for some years after this whole situation. I don't know. I'm not trying to predict anything. I'm just simply saying that, like just like you said, emotionally reacting instead of logically going through. Who else is replacing Tesla in the United States? You couldn't really name anybody in the main category. So I mean, you just gotta think about it like that. Gotta think about it like that.
Yeah, but man, I mean, that's all I got for y'all. Just being methodical and really deep diving and not just paying attention to the surface level BS when you're an investor. You have to look behind the curtain. You got to really pay attention to what's going on, really know what these companies are doing, what they're investing their money in, where they're headed. Do they solve a real problem? Who are their competitors? What do their competitors do better than them? What do they do better than their competitors? Are they dominating the space? Are they losing market share? Is somebody, gaining traction on them? Is there a new company on the block? You know,
Right.
you have to be paying attention to all these things, and you have to be, like we talked about before, just balancing your portfolio and just being a smart investor, man. Just being smart about it, staying consistent, investing in the right things, knowing when to sell, when to get in. And yeah, man, that's all I got for y'all tonight, man.
Before we get out of here, I want to show y'all a little something, a little sneak peek. That's something that's been we talked about AI. We've talked about knowing your tools, knowing where to go, knowing how to use a lot of this stuff, especially in terms of AI. If you don't use AI in any particular way to make your life, your day to day easier, you playing things on hard mode for no reason. So I want to show y'all a little something I and a few other people have been working on that I'm working with behind the scenes. So when it comes to crypto, being able to track your portfolio in detail is extremely important, especially when it comes to DeFi. You want to be able to track performance, things of that nature. And there are some tools out there, but they always are missing something, or they're extremely expensive for no freaking reason. And 80 to 90% of people who are in crypto either don't know about it or can't afford it. Now, what does that have to do with AI? Well, this platform is called Replit. And as a ex developer, because I don't develop anymore, I don't code really in my day-to-day job like I used to. Um, it is hard, especially when you're an entrepreneur. It is hard to find good developers at a solid rate that you can afford, and that will actually get the job done. And so platforms like Cursor and Replit, they're absolutely amazing because that takes that out of there. This is a platform that allows you to code using artificial intelligence, using prompting. So think of it like Chat GBT, where you ask it a question and it can answer it, or in this case, you tell it to do something and it will build it. So I have completely built, along with two other people, I have completely built this DeFi tracker that's still a work in progress. We got some dummy data. It's not released, it's not production ready. I'm just giving y'all a sneak peek of what we've been building and kind of let you see the lot feed. This purple text right here, or no, this blue text right here is actually one of my teammates who is prompting the AI model behind the scenes to build whatever he wants to build. Um, and this has all been built using artificial intelligence. So when we say that AI is like a massive, massive disruptor, we are not bullshitting you, like by any means. I am in IT. I've gone to college. I've spent hours learning programming languages. Fast forward to 2025, I don't have to do that.
Bro.
I don't
Agentic
have to do that.
agentic AI gonna take so many jobs, bro.
Bro, it's already happening. Like at my job now, it's almost mandated that you use artificial intelligence in some form or fashion to either help you code or check your code.
So are y'all using AI agents yet?
Absolutely. We use Cursor. Cursor, I love it way better than Replit. Replit is it's cool, it's up and coming. But Cursor is more expensive. So of course, when you're an entrepreneur, you go with the cheaper route until you can get to the premium demium. You feel me? So yeah, nah, I just wanted to kind of give y'all a sneak peek of what can be done with artificial intelligence. We do plan to release this portfolio tracker to production for all people to use. Don't know what the pricing model or anything like that will be, but it will be monetized. If we can get some grants, stuff like that, we may reduce the paywall on certain features, but for the most part, this will have some type of subscription that is tied with it. So, yeah, artificial intelligence is here. It's disrupting a lot of different industries, healthcare, technology, developers, um, finance. I mean, really any industry you can think of, if it hasn't been disrupted by some degree by artificial intelligence yet, I don't think it will be long before it is. And I wanted to give you a sneak peek of how easy it is to work with people in these types of environments. I've paid developers before to build certain things, and it didn't pan out. Uh, Products were not up to quality, or it never got completed. Kind of just had to take the L and move on. But now with something like Replit or Cursor, I don't have to worry about that. I ain't got to go. I don't really need to go hire a developer because from the front end, the middle layer, and the back end, like databases and stuff, I can do all of that using Replit, all by prompting, all by prompting. So when you hear podcasts or people in general in real life talk about um artificial intelligence and how, from an investing perspective, it's extremely important, but from a usage, getting used to these AI products or these AI type of assistants, it's imperative. It's a major disruptor, so you can make some bread off of it, but you can also use it to improve your day-to-day life. So don't sleep, man. We ain't just talking about any of this stuff just for the hell of it. It's actually here, and it's going to be revolutionary for sure. So just wanted to tell y'all that before we got up out of here.
I hope y'all had them pins and pass out tonight.
Boy,
Yeah, boy.
boy,
Hope y'all did. Hope y'all did.
boy,
If not a lot happened, if not a lot happened this week, we may get it. We may get into some charting for y'all next week. A lot of people
for
been
sure,
like that. So
for sure, for sure. And I may go over some more DeFi stuff. There's perpetual futures, so that also can involve some charting too. So but yeah, I kind of like this teaching stuff, showing y'all the practicality of it instead of just making it seem like we just speaking out from a high horse because we're not. I can speak from experience. We use a lot of this stuff on a day-to-day basis. We encounter this stuff. We know what we talking about, so we ain't never gonna talk about nothing we don't know what we talking about. And that's just that. Catch you on the next one.
see y'all later, man.
Peace.